Earlier this year, one of the greatest inventors of all time, Charlie Munger, predicted that the market would face considerable trouble. The world knows Charlie to be very vast regarding investments and financial predictions, and he has given us the perfect way to invest, even during a recession. Charlie has been discussing his outlook on the economy, oil, and renewable energy. Surely, you will expect him to know more. Indeed, there is no better way than Charlie's tips on formulating wealth, and he believes the recession won't be a setback. Like Warren Buffett, his vast wealth is also built primarily on the stock market, making him one of the most successful investors of all time. Of course, Charlie Munger isn't the only investor around, but what makes him different from others is his tips, manner, and rules of investing. And following his lead in terms of investment psychology and strategies will serve you well in your activities, even when the market is doing badly. We trust him for this. Which brings us here today. In this video, we will be talking about Charlie Munger's strategy of investing during a recession. Like me, I know you can't wait to utilize Charlie's investment tips we'll be having today. So, watch this video to the end and get ready to be inspired. Without wasting any more time, let's get going. Charlie Munger has already advised investors to look beyond the inflation spike and back fossil fuels and renewable energy. He also said they should never have anything to do with cryptocurrencies. Charlie says he has seen it all. And the last comparable period to what we're seeing today is definitely related to what happened in the 1970s. Charlie is now worried that what we're in right now could end up being worse than before. Munger says, "I'm always aware of it, but it doesn't stop me from operating. I'm 98.5 years of age, and I've seen a lot of inflation. I tend to live through inflation. I've lived through a lot of it already in my long life. It doesn't discourage. Inflation is always with us in an episodic way. That's what modernity causes. So eventually, I assume every currency in the world will go down to nothing. That's my basic cynical view." Nevertheless, Charlie Munger has acknowledged that interest rate rises would significantly impact stock prices and business valuations. That being said, let's now focus more on Munger's best way to handle these unfavorable economic periods as an investor. Charlie's first step to making significant gains in investments is for one to acquire highly profitable equities. Yes, this is indeed the preliminary. And he always advises people to do the same, even during a recession. Charlie first started by buying equity shares of profitable businesses, and you can agree that it is a wise investment. Are you wondering what this means? Alright, this is it. When an individual owns business equity, it does mean that they own a financial interest in a particular company. So those who own equity are always referred to as shareholders. You can also refer to equities as securities, an investment a shareholder can sell or exchange for money. If a company were to close and pay off its debts, a shareholder's equity is the money it would collect. So, owning stock in a company gives shareholders the potential for capital gains and dividends. If you own equity through your job, it is undoubtedly a great way to build wealth. Charlie also said, it may be that you have to choose the least bad of a bunch of options that frequently happens in human decision-making. Regarding purchasing cryptocurrency at this time, Munger emphasizes more on it. Crypto? You shouldn't even try to have it in your mind to buy. Munger has always been brutally honest about his hatred for investing in cryptocurrency. He had stated in the past that cryptos are fraudulent. He even deemed Bitcoin to be a noxious poison, stupid, and immoral. He claimed that Bitcoin sellers and other altcoins are not trustworthy and that digital currencies are nothing but a mass folly. "I think anybody that sells this stuff is either delusional or evil," Munger told the Financial Review. "I won't touch the crypto. I'm not interested in undermining the national currencies of the world. Never touch it. Never buy it. Let it pass by. I regard it as almost insane to buy this stuff or to trade in it. I just avoid it as if it were an open sewer full of malicious organisms. I just totally avoid and recommend everyone else follow my example." Munger also emphasizes that being a business owner can be highly profitable. The courage to take risks and start your own business is always part of the dream. Generally speaking, people see a job as a safe and secure option, and that business can scare many people because of the tasks involved in just getting started and even the risks it takes. However, if you don't start, you won't get there. Despite the high financial risk, it is always rewarding to run your own business because it gives you a higher chance to make more money even when the economy isn't doing well. As a business owner, you'll be your own boss and you can't get fired, unlike when you're employed by someone else. You will also be free to make decisions crucial to your business's success and indeed benefit from your own hard work. Another thing is you should always know what you're investing in so as not to lose your money. This is similar to one of Warren Buffett's rules of investing. Do not just make a blind investment, no matter how it is hyped on social networks or in the media. You should understand that every investment should always be calculated in your area of interest. So, if you're planning to invest just like Munger, it's always best to invest in industries that interest you and know intimately. Investing because others are doing it isn't a good idea. This is because investing is a process that takes quite a bit of research. You don't have to do exclusive research if you're not interested in whatever you're researching. Charlie also explained to investors not to have over-diversified investments. Indeed, over-diversification increases risk, stunts returns, and raises transaction costs and taxes. It will be unwise and stupid to put all eggs in a basket, especially in this economic crisis. Owning too many mutual funds in multiple areas can increase risk by concentrating your holdings in a few areas. Charlie advocates saving as much as he inspires you to invest. And he believes that savings and investment go hand in hand. He understands that it is always very difficult to hit your first $100,000 mark. But once you have done the work and achieved the same, it will help you earn even millions. Another way to invest during recession, according to Charlie Munger, is to set long-term goals. The most common mistake is trying to seize any rising price wave for quick returns, which does not work that way. You shouldn't invest all because you want to see an instant gain, and it's best to invest with a multi-decade horizon rather than seeking quick earnings. Finally, the best investment one can ever make is investing in yourself. This is one of Charlie's steps to make a whole lot during a recession. This means you need to invest in yourself as much as you possibly can. It only appears sad that self-investment falls low on our list of priorities and becomes something we put off because we don't have more time, money, or motivation. But this shouldn't be so. You should understand that anything you do to improve your talents and make yourself more valuable will always get paid off in the long run. You will always be your greatest asset. So, developing your skill set will boost your market value, especially during an economic recession. And that's all for today, guys, and we hope you enjoy this video. If you're optimistic about the power of investment, make sure you subscribe to the channel and give this video a like. Thanks for watching. See you in the next video.